Melissa, thanks. It's good to see you, and I love the way you just phrased that because I'm going to repeat it back to you. I think we are just digesting a rate shock. And I also want to reflect on what you just said. It probably is going to be the first down week in 4. So we had 3 up weeks. We bounced off that low with a lot of bad news priced in. This feels to me like just a natural pause in an otherwise upward trend that has developed. Now, I realize that's not a popular sentiment. I've been listening to the show and I've been on it all week. And it's not that I miss the negatives that are out there. You know, the yield curve inverted this week. All the Fed speeches that seem to indicate that we're going to get 50 basis points and probably more than one 50 basis point hike. Ukraine, Russia. I see what's all out there. What I submit to you is my position. This is baked into the cake right now. This is priced into the market. And what's not priced into the market is what may likely happen over the next 3 months. Inflation may have peaked. Ukraine and Russia could get worse, but it's more likely that it's at a stalemate. You've got labor force participation rate picking up, which eases wage pressures. You've got freight supply chains unsnarling, and yes, still a China problem, but they've been unsnarling. There's a pretty good chance that inflation starts to show the whites of its eyes just as the Fed gets one big massive rate hike in early May, and then it can sit back and say, well, wait a second. Let's see how we do. They're still going to raise rates. But this idea that they're going to get to 2.5% by the end of the year, I'm suspicious of that. I think they don't have to.
Jim Lebenthal is walking on the sunny side of the street this morning or afternoon. Pete Najarian, where do you stand? Because I think it has become more consensus these days to believe that perhaps inflation fears haven't been yet priced into the market in terms of inflation getting worse than what we're seeing right now, that recession is a possibility right now. The scenario that Jim lays out seems to be a counter that consensus notion at this point. Where would you fall?
Yeah, I'm walking around out in the sun in a pair of swim trunks, but I also have an umbrella with me. I'm a little bit cautious, in other words. I mean, what we're seeing right now, Mel, is great, and Jim points it out. He does a great job of analyzing all of the different points that he brought up, and I couldn't agree more. I think when you see that supply chain starting to loosen, I mean, that is something that obviously is very, very critical for all of us in just about every part of our lives. So that's something that I think everybody's focused on that. We also, of course, keep our eye on what's going on with Russia, Ukraine. That's a big deal. And I'm sort of in the Jim camp. I think that the extraordinary numbers that I've been heard day after day about what the Fed's going to do throughout the next multiple sessions when they're going to be commenting on what they're thinking about doing. I don't know. I think it could be very interesting to see what they do following what we're expecting. And they have been transparent, Mel, for a long time. I hear a lot of people being very critical about the Fed. They've been very transparent. They've told us, hey, look, we're going to do a quarter point. There's a good chance we're going to do a half a point. Whatever it is, they've been very, very clear. So because of that, I think you just got to trade around it. We all see what's going on today. A little bit in the last couple of days, a little bit of pressure on some of those NASDAQ stocks, but they had that great run as well. So it does take a little bit of movement, I think, to pause at times. And I think that's what we're seeing out of the NASDAQ right now is more of a pause than a dramatic pullback.